Hi, everyone. Good morning. Thank you for joining us at our last Liam event. And make sure to stay tuned for future events by checking our website and weekly emails. Today, EMG welcomes Tana Johnson with Lincoln. Uh, please share your questions in the Q&A chat, and Tana will cover them in the end. Feel free to enter the questions as they come up. We just want to make sure you don't forget. But yes, hi Tana, thank you for being here, and the
Hi,
floor is yours.
thank you so much for having me. Good morning, everyone. Again, my name is Tana Johnson. I am the Regional Sales Vice President for Lincoln. I cover EMG and all of their agents and advisors. It is such a pleasure to be here and to help wrap up Life Insurance Awareness Month. I am excited to have my partner, Michael Deaton. Michael is a business insurance consultant here at Lincoln Financial. I think we've got a very interesting discussion for you guys today. If you've ever conducted a business insurance case, I know sometimes the underwriting process feels quite different. There's additional requirements. Sometimes there seems to be a lot of mystery behind what is the underwriter actually going to want. So we're going to try to unveil some of that mystery for you today. This is going to be a little bit of a different type of discussion, more of what I call a fireside chat. You're going to hear Michael and I kind of just have an informal discussion with one another, some Q&A. You will see some slides on the screen from time to time just to give you guys some reference tools as we're talking through some of the different complexities and just tips that we can provide for you on how to make your business insurance cases and really package those cases for success when you're bringing them to Lincoln and you're trying to present those to an underwriter. So with that being said, Michael, why don't I give you a second? I said you're a business insurance consultant, but just to introduce yourself, tell the group a little bit about you and how long you've been with Lincoln.
Sure. No, thank you, Tana, and good morning, everyone. Excited to be here. I do think this is a timely conversation, especially as we're going into year end and we're trying to get those cases into underwriting and to the finish line. But my role, as Tana alluded to, I'm a business insurance consultant with Lincoln. My day-to-day is focused on helping advisors, financial professionals, really kind of threefold: identify opportunities, identify the Lincoln resources, whether it be the product, the underwriting, marketing resources that helps them to move those conversations forward once they have identified a prospect. And then ultimately, kind of what we're here today to talk about, Tana, which is, helping them, prepare for that implementation phase, because that's obviously where the rubber meets the road. That's where, we've got the fish on the line and we're trying to reel it into the boat. That's really the critical part, right? We don't want to have any missteps there, and we want to have a good experience from start to finish. So that's my role, is really to kind of bring financial professionals from the identification stage to the implementation stage, and you kind of said it, packaging those things for success.
Yep, exactly. Well, Michael, thank you so much for letting us know a little bit about what you do. What do you say we go ahead and get started?
Absolutely.
Awesome. So you see a lot of variance when it comes to business insurance planning, because you see it across all of our different life distribution channels here at Lincoln, and you consult for the entire country. So we know that a lot of these cases vary in terms of strategy and the level of complexity. What do you feel is the most important thing that an agent should do when they're initially submitting a case? And how do you position that case for success?
That's, obviously, that's the end game, right? Is how do we get these things past that underwriter barrier, right? And we hope we don't have a barrier, but when we have these more complex cases, which business insurance can sometimes fit into, we do have a different process that we want to be mindful of as we go. But the end game here is to get them across the finish line, maximize the time that you're spending, maximize the time that your client's having to spend. Before I get into like the common denominator for financial professionals that do a tremendous amount of business life insurance as part of their practice, one of the things that I think is sometimes overlooked, but I think is a critical, even pre-step, Tana, before we actually submit a case, is as you've already worked with your client to identify the need and the Lincoln solution, all the things that go in with that, risk management that we're trying to do for that business owner. and they've given you the green light to move forward with the submission, I think it's a perfect opportunity or juncture in the conversation, Tana, to really set the client's expectations, right? This is going to potentially be a little bit more of an investigative process that underwriting is going to want to do. They're going to want to dig in to understand what this business is, what does it do, how long has it been in existence, and I think having that preemptive conversation with your business owner clients kind of level sets, how the process is going to unfold. Clearly, a lot of times we have the medical component. That's table stakes for business, for all life insurance cases for the most part. But it's that financial underwriting, that deeper discovery into the business, that's really a little bit more maybe invasive than what we might do on the personal side. So I think setting the client's expectations is almost a pre-submission, best practice. But when I talk with advisors and financial professionals that again have really honed in on business life insurance for their practice focus, the common denominator that I hear from them is I utilize a cover letter. And if they're creating the volume of business life insurance, they don't have time to go and do the back and forth with underwriting. And so what they've utilized is a cover letter, really to be the tool, if you will, that brings that business, brings those insureds to light. It provides color to that underwriter. And if you go to our underwriters and ask what's the one thing that they would love to have for every single case, it's a cover letter. So a detailed cover letter is critical, in my opinion, in terms of bridging the gap between you and your client and getting past that underwriter barrier. It's going to reduce the friction. It's going to do the turnaround time. And it really gives you the opportunity on the front end as the financial professional to tell your client story. Again, to bring this business off the paper for the underwriter, so that they can see that this is actual business in Lincolnton, Nebraska, where this is a viable business. These are people that have history doing what they've been doing, and that really is going to help set the tone off the bat with that underwriter that, hey, this advisor, this client has given real serious consideration to what they're requesting and are giving us better insights into why they're requesting this coverage. And all that can be done in that detailed cover letter.
Yep. The cover letters are so important. I'll never forget. Thankfully, it wasn't the senior underwriting director for EMG, but it was several years ago, probably about 6 years ago. I was at a meeting, and so the topic of cover letters came up, and I was talking to this specific underwriting director, and he made the comment to me. He said, "Tana, you never want me to get out my shovel and start digging." He said, "Less is not more when it comes to business insurance cases." He said, "You really want to make sure that you're giving us a really good story, a good understanding of this business, not just about the business financially, but also about the business owner themselves, what the objective is of the plan." So I can't emphasize enough just how important the cover letter is. I'm so glad you mentioned that. I know we'll talk about it a little bit more here in a moment. But I want to shift gears just a little bit and maybe talk about some of the common types of business insurance planning before we kind of dive into a little more about the underwriting. Maybe talk a little bit about the risk pillars. And we'll go ahead and share my screen for a second, because I know we've got a pretty good reference piece inside one of our presentations, just so everyone can kind of follow along as you're talking through those risk pillars. Let's see, Michael, can you see the presentation?
Absolutely.
Perfect. Let's get it to the next slide. There we go.
Perfect. So, naturally, with the initial pre-sale conversations you're having with your business owner, the goal really is to identify those business risks that can really disrupt the business. And when we start to, move that conversation forward, further that discovery and fact-finding process, we're ultimately teasing out, at a macro level, Tana, 3 potential life insurance opportunities. There's life insurance funding for buy-sell planning or succession planning, where we're really trying to, maximize the value for business owners that are departing their business, whether by retirement or by a death, and how life insurance can be a source of liquidity to ease that burden and that transition as ownership interests are being exchanged. Another big one that kind of falls under the umbrella of business continuity is also working with that business owner to identify those key employees beyond him or herself, naturally, that are responsible for driving the value of the business. Whether that be a sales representative, whether that be a technical specialist, someone in the operations side that's instrumental in driving efficiencies for that business owner. And ultimately positioning that, to that business owner, if this person wasn't in their seat today, well, what kind of disruption does that have? And life insurance, can certainly be a big part of that continuity planning in terms of replacing a key employee if they pass away or become disabled. But also there's the retention, how do we keep people in their seat and not leave to go to competition? Because that could be equally disruptive for that business owner's plans for growth and success. And so life insurance across each of these three risk pillars, as we refer to them as, plays a critical part. And as we talk through this more today, the financial considerations, Tana touched on this just a moment ago, but the phrasing that I like to use is that qualitative and quantitative elements that you put into your cover letter, that you're using to build your case, might be slightly different of what you use for a buy-sell case versus a key person. And we're going to really kind of dive deeper into that as Tana and I move the conversation forward today.
Michael, I'm glad we went over the risk pillars, because I know that in my territory this year, I've seen a significant increase in buy-sell planning and also key man planning. Now, I think the buy-sell component has been driven somewhat by some discussion around something called the Connolly case. We won't necessarily talk about this today, but if you want to learn more, we do have a white paper and some other resources that we can share around the Connolly case. But in terms of key man, of course, there's just been some disruptions, whether it was COVID, just a lot of change, focus on employee retention, making sure that businesses have protection in the event they lose a key partner. And I think that's becoming just more and more of an awareness with a lot of business owners, and they're kind of seeking that type of protection and just planning for their business, just to make sure that they can financially sustain the company in the event something happens. So we've certainly seen more of that within my territory this year. We've talked about the cover letter a few times, so I want to go back to the cover letter for a second, because that's such an important piece. And what are some of the critical things that that's important for them to include when we're presenting a case to an underwriter, like a buy-sell case or a key man case, for example?
Yeah. Well, I think it first starts, with the purpose of coverage. What is the risk that we're trying to help that business owner address? So, as an example here, we're looking at some guidelines, a roadmap, if you will, of how to package a buy-sell succession planning. And this was actually some of the pieces that are referenced, or the talking points here, are actually excerpts from a piece that we'll circulate after the call today that really is kind of a checklist of sorts of what to include in your cover letters, what to include as part of that submission packet, ultimately to set your case up for success, to get it across the finish line with less effort, less back and forth with the underwriters, and obviously to reduce the burdens for you and your client. But in a cover letter, as I mentioned just a second ago, there's qualitative elements and there's quantitative elements. Really the qualitative elements are really telling that business owner's story. What is their business? How long have they been in business? Who are their clients? Where do they derive their revenue? Who are the competitors? How long have the owners been in business? Is this a startup company? If it is, that's fine. But what was their career path prior to joining that? Trying to bring some of these added elements, out of the dark for the underwriter, so that they can see that this is a true business, on the ground. This is, they have a longevity ahead of them. These are because a big thing that from an underwriting standpoint doesn't get talked about a lot is the persistency of coverage, right? They want to see that there's financial health, that this business has a successful trajectory ahead of them or has had it behind them in a lot of cases. And so that they know that when they're, making that offer of coverage, that it's going to the right type of client, and we're giving the coverage that aligns with the risk. But it is a balancing of that qualitative, again, the color that goes behind the business owner, the business. And in this case, Tan, I think you and I both could agree, more is better. Don't leave the underwriters to their own devices to do the digging. This is really the perfect time to tell the business owner's story for them. Aside from that, in that cover letter, even though you may be submitting additional documentation, I think also it's the starting to bridge that introduction into the quantitative side of a cover letter. How did you arrive at the face amount, right? What's the formula? And I think those more scientific ways to approach underwriting are going to be very well received. So it is this balance between the qualitative, which again is the color behind the business, behind the insureds, the profitability of the business, but then it's going to be married with the quantitative, the financial documentation, the formulas. All of that can be packaged in a cover letter, and if that is really the only thing that gets submitted, you already are a long ways ahead of making that friendship with that underwriter, because it is something that has kind of faded out of the background of a lot of life insurance submissions. And one other point, that I would make, naturally, as you work through different size cases, there's going to be additional documentation that may be needed. And we're going to touch on that in a second. But what I would strongly suggest for everybody on this call is use a cover letter regardless of the face amount when you're talking about business life insurance or any complex life insurance application. It is going to do a lot to minimize your back and forth, because the calls that Tana and I get, those agents are just as frustrated on their $500,000 term submission as they are for the $20 million key person submission that they submitted, 2 weeks later. So if you follow this process and kind of use this checklist of what to include in your cover letter, it's going to set up all of your cases for a better chance of success. And again, reducing that time that it takes to implement the solutions that you're recommending.
I'm glad you mentioned, when calculating the face amount, providing a formula or more formulaic approach. Couple of things come to mind when you mentioned that, because I think of 501c3 organizations, particularly churches, oftentimes when we're coming up with coverage for them, they really want to know a lot about that representative within the organization, like what they do for the business, how are they arriving at the amount of coverage, how much fundraising do they draw in, is there proof of the amount of fundraising that they're conducting for the nonprofit. So it's important to provide those key details as part of the formula as well. You mentioned startups also, so kind of wanted to, because we've got, some of the additional documentation listed on the screen here based on face amount. I know startups, for the most part, we can't look at like a future valuation. We have to underwrite for the value of the business today. And that is one pitfall that I sometimes see, is that, the business may be doing really well. The growth projections look good, but from an underwriting perspective here at Lincoln, they do view startups based off the financials and where the business stands today and present time. So that's just something good to keep in mind if you're working within a startup. And then I think one other thing is, when it comes to the face amounts, Michael, at what point do they typically ask for tax returns, whether it's business or personal tax returns?
Yeah, so generally you're going to start to see that deeper dive into those personal or business tax returns when you're getting up there closer to 10 million. Now I'm going to caveat that, put a little asterisk that, regardless of the face amount, the underwriter always can reserve the discretion to come back and request personal tax returns or business tax returns, depending on, the business type and the purpose of coverage. So again, I think that goes back to, preparing your client, again, regardless of the face amount, that there may be additional financial documents that are being requested. But one way to potentially mitigate those, that additional financial requests for some of those lower face amounts is to build some of that detail into your cover letter. Use that cover letter to fill in the gaps. If there is a little bit of a friction point with your client and giving them personal or business tax returns, but at the same time, again, I think setting the expectation with the client that those documents may still need to be submitted at some point during the process. Again, getting that information to them earlier, in the submission or even the pre-submission process is just going to help, manage expectations if you do have to go back and get it for a lower face amount.
Now, outside of the tax returns, what other type of documentation are the underwriters typically looking for to satisfy the financial underwriting requirements?
Sure. So, this can vary by, the business insurance risk that we're looking to solve. I'll just put it out there. Executive benefit planning generally doesn't invite a lot of financial underwriting scrutiny, to the business financial side of the equation. So you tend to see less, back and forth with the underwriters on that, but really it's the two protection focused risk, right? Buy, sell, succession planning, and key person that they're going to want to dig into some of those financials. Things to be mindful of or to be preparing your client to potentially submit: personal tax returns, business tax returns. That it could also include additional financial details on the business, such as a balance sheet or a profit and loss statement. We do have, if you don't have the access or immediate access to some of those financials from the client, we do have a business financial supplement. Again, tend to be utilized with some of our lower face amounts, where you can, ask more streamlined questions to get to that same information. But the bottom line, they're wanting to see from these financial documents that the business is profitable, that they are on a trajectory. And if you can provide multiple years, so that we're not just showing one snapshot, that we're showing multiple years, that, yes, 2 or 3 years ago, they were startup, but now, they've got financial history there that supports their growth. And that's going to be a big win. Aside from that, K1 distributions, Tana, I think even I've seen that from time to time. When you get to the larger face amounts, you are going to likely see underwriters wanting that third-party authorization. Third party, signing off essentially on the financials that are being requested. And that could be the CPA. In some cases, it could be the client's attorney. I've seen it in some smaller face amounts where it could be the CFO of the company if they have that type of organizational structure. So those are some of the ones that, as you're talking with your client in that pre-submission stage, to kind of set the expectation for.
Yeah, no, absolutely. It's just good for everyone to know. Typically, if the underwriter is asking for that business financial supplement or the personal financial supplement, that is a Lincoln form, by the way, that we provide. But they do typically want that third party authorization, and it usually is not someone within the business, just because they want that confirmation that those financials are actually the accurate financials for that organization. I know sometimes I've seen accountant brokerage statements work, just to provide some financial verification. If there's a collateral assignment of some form, obviously there's a form that they want to see for that. And they want some, some information on any type of collateral assignment if the policy is being used as collateral for some type of business loan. So that's some other documentation that they may ask for that we may see. Before I transition to the next question, Michael, any other comments on this discussion just about documentation and the cover letter?
Yeah, again, this speaks a little bit to the strategy and the complexity of the strategy. But if it's a premium financed type of business insurance case, naturally that's going to require some additional documentation that goes along with it. Or if it's a split dollar case, you may see, a request to see the collateral assignment that goes along with it. So those aren't necessarily financial, but there are going to be other pieces that may be required to, complete the package, if you will, to get this thing across the finish line.
Yeah. So Michael, we know business owner clients are busy. So they often prefer limited interaction with the agent. They want it to be as quick and efficient as possible. So when we see delays occur on cases, what are some of the common issues that can derail a case for an agent and a client?
Yeah. So, don't want to beat the dead horse, but, I think the cover letter typically is missing. But aside from that, one of the things that the underwriters are trying to connect the dots to is, how did we arrive at this request for coverage? They really want to see some type of formula or an articulation, uh, hopefully, from a quantitative perspective, at how we arrived at this coverage. They can easily back into the math. That in and of itself, Tana, I think can go a long way to reducing the underwriting friction. I'll say that, in all transparency, a lot of times, as financial professionals, the client's coming to you with, hey, I need $1 million. And it's just a number they've pulled out that they feel is going to, financially, provide what they would, for the risk that they're trying to address. But for the underwriter, that's, we don't want that kind of napkin paper math. So a formula is really, even if it's not built out in a cover letter, is really going to help ease the burdens of justification. It's going to reduce the friction because the underwriter is not having to guess. Again, I would not rely on our underwriter or any underwriters to be business valuation experts. To Tana's comments earlier, you don't want to leave the underwriter to do their own digging. So this is, again, your opportunity to show them how you arrived at that coverage, put it in a formulaic way so that the dots can be connected without the underwriter having to give too much thought. I think that's a big win that can be achieved with just very little effort.
Yeah. So I know a lot of times the client may desire more coverage than what we can financially justify. So not every scenario, but I know we've been able to kind of work with that some to provide some additional coverage than what we would just for a straight key man policy or a straight buy sell strategy. What are some of the ways that agents can be strategic to help the client achieve the requested coverage they're looking for?
Gotcha. Well, this kind of ties into the previous question, Tana, but I think, we'll use it to kind of answer your most immediate question. Is one rule of thumb to kind of pack away is that underwriting is not going to extend coverage capacity greater than the value of the business. So kind of, knowing the value of the business is going to be kind of paramount to where the ceiling is going to start to come in with our ability to offer coverage. So just kind of pack that away, that know that that's kind of a limitation that's going to exist. It's a pretty hard line that we draw there. But naturally, you brought up a scenario that we see often, Tana, probably more so than we would probably expect, is that a client comes to the financial professional with, $1 million request for coverage. But the buy sell justification maybe only gets us to $750,000. Well, we don't necessarily want to have to go back to our client and say, financially, we're only there at 750. So how do we close that gap or reduce that shortfall? And one of the ways that we commonly see and this is primarily driven at corporate owned coverage, so your entity redemption buy sell, is to stack financial justification with key person coverage. So you have buy sell justification that's supporting the 750. Well, how do we close the gap for the 250 to get to the client's desired request of $1 million? Well, this is where that color around what does the employee do, what's their income, and then stacking a key person coverage justification, again, also providing the formula, by way of their income to help close that gap. So it's something where you can be a little creative, but it's still going to, as you're packaging that case, you want to provide that justification. What we see too often is we're trying to close that gap after it's gotten to an underwriter. If we see that gap is already there before it gets to an underwriter, I think that's a perfect opportunity to add into that cover letter that we're applying for this amount of buy sell coverage and this amount of key person coverage. Again, connecting the dots between the two risks that we're trying to address in a single solution. And that's going to help provide a better avenue to pursue underwriting approval because they can clearly articulate the two needs built into one request for coverage.
Yeah, I think one of the benefits of partnering with Lincoln too, because you mentioned it's important that we won't exceed, the value of the business in terms of underwriting the coverage. So for those who may not know, Lincoln does have the ability to do an informal valuation. This isn't a formally prepared valuation, but it's an informal review. One of our advanced planning attorneys, his name is Ryan Patton, and he is willing to conduct those. So there is some documentation that he would need in order to be able to provide that. You can always reach out to your sales director at EMG, who can contact myself or Michael to try to get that valuation prepared from Ryan so that you could utilize that as kind of a guide when you're working on these different types of business insurance planning strategies. I'd like to change gears a little bit because there's been a lot more attention to private equity and venture capital opportunities in recent years. And so just the desire for key man coverage for those key stakeholders. So Lincoln tends to be rather competitive in this space. So can you talk a little bit about how we differ there?
Yeah, so I think, it's good for everybody to kind of have a historical perspective on, what's driving this kind of growth, this little bit of a niche growth area within the life insurance industry, which is private equity justified or venture capital key person coverage. Probably going back 7 to 10 years ago, carriers started seeing quite a bit of interest or inquiries in obtaining key person coverage coming from the private equity and venture capital arenas on businesses that they were giving capital to, that they were investing in. And if everybody kind of goes back to that time frame, most carriers have always been hesitant to say, hey, we're taking out insurance to insure an investment, right? Well, because the frequency of those inquiries and the players that were involved and some of the added detail that was coming to light with these cases, underwriting started to liberalize our stance. And I think Lincoln was kind of on the front end of that transition and really started to see like, hey, we start to see the insurable interest here. And they really decided that they would move to the next phase of that, which is actually building guidelines for the marketplace so that we can put Lincoln in a position to win in this. And in addition to putting guidelines, because we had seen so much inquiries and experience with these types of cases, it kind of further, built us to be kind of a niche carrier with this. And these are large face key person policies. Generally, Lincoln is willing to consider 25% of the capital investment coming from the private equity or venture capital firm, Tana, into the business. The one caveat is that the private equity or venture capital firm can't own the coverage, that for the amount that's being applied for. It's generally going to be coverage owned by the business that received the investment from the private equity or venture capital firm. But it's given us a new angle, a new financial justification angle to go out and capture these large cases. And it's actually, it's been an increasing trend, but to give you kind of a staggering statistic, there's somewhere between $2 to $3 trillion globally, Tana, of dry powder sitting on the sidelines in private equity and venture capital funds waiting to be deployed. So what does that mean? This niche, aspect of life insurance opportunities isn't going away. And the fact that Lincoln has kind of evolved to already have the experience and insights into this market, really gives you or should give you some assurances that Lincoln is a preferred partner when it comes to underwriting. Now, to be transparent, these are term cases generally, but these are a large case term. What we're often seeing, high 5-figure, 6-figure cases in this arena. So it can be a real nice, boost for your practice if you have those relationships in that private equity or venture capital space.
Yeah, I know when we made this change a few years ago as a wholesaler, I was really excited because there's so much opportunity in this space if you have access to those types of relationships. And you just mentioned all of the capital that's sitting on the side, just kind of waiting to be implemented. So certainly there's more opportunity to come. I know that sometimes complex cases need assistance, right, with planning on the front end just to help strengthen the case prior to submission. I know EMG from time to time will partner with Lincoln and maybe one of our advanced planning attorneys. But in terms of business insurance planning, what types of opportunities are you frequently seeing in partnering with them on? I know we mentioned Ryan and business valuations a moment ago, but are there some other opportunities and things that you're seeing currently from an advanced planning perspective when it comes to the business insurance
Sure.
arena?
This actually is something that you kind of touched on briefly, but if I look at the sales trends for 2023, despite all the economic news that's been circulating around, there's been a lot of conversation around buy, sell, and business continuity planning. Some of it derived, as you mentioned, Tana, from that Connolly tax case, which has prompted a lot of interest in buy, sell reviews and interest in funding for those buy, sell reviews. But one of the advantages of having access to Lincoln's advanced sales team, in addition to Ryan's technical expertise to be able to create these informal valuations, is that they're also willing, the advanced sales team, to look at some of the buy sell agreements, to make sure, again, they can't give the tax or legal advice, Tana, but they can give some insights to, hey, if this was my client, these would be some of the things that I would be looking to maybe add or to further clarify, to avoid some of the pitfalls that we're seeing in the Connolly tax case, as an example, right? Those are things that the financial professional can take back to the client, can take back to the client's tax counsel or CPA, and have that for further discussion. Is our buy-sell agreement structure suited for our business today and where we're going with it? And then Ryan's informal valuation is just really a silver lining, if you will, because we know that understanding the value of the business really helps us to unlock the opportunities that may come along with that particular client. So I think, those two aspects amongst many others, because naturally, if you're talking to a business owner, Tana, you and I see this all the time. You have a business insurance opportunity, but it's a family business. Guess what? So they're bridging that whole conversation from the business planning into the estate planning. Well, guess what? Our advanced sales attorneys and that team there, really have the expertise to take that conversation and pivot from the business risk to the estate planning risk. And so that's the added advantage of seeing the synergies between what we do on the sales side, on the business insurance case and the underwriting, to what they can do to unlock opportunities from the business owner and their broader financial planning concerns.
Now, Michael, I know that not every case is complex. Sometimes we run into more simplified or group type of situations that really don't fit the key, the mold of an individual key man or an individual or partnership buy sell opportunity. So let's talk a little bit about our multi-life platforms. What do those look like? What are some of the characteristics that they need to look for or present to Lincoln when they're working on a multi-life opportunity?
Sure. So, I mean, this is kind of an exciting thing about, working in the business owner marketplace, is that inevitably, you're going to run into larger cases, as you start to prospect or look through your book of business. Naturally, you're going to run into business owners that have needs that extend beyond just themselves, or that one or two, management employees that have been with them for some time. And when you start to get into, 5, 10, 20 lives, which is not unfathomable to think. I mean, these businesses exist in your communities today. The question there is, how do I help my business owners ease the burden of implementation, Tana? I mean, that's at the end of the day, when we talk about underwriting options, because that's what, guaranteed issue or simplified issue is, it's an option. It really is focused on, how do I ease the burden of implementation? How do I save my business owner and, their targeted, insurers that we're bringing into this plan? How do we save their time? Right. And that's where it's exciting to say that Lincoln does have a multi-life underwriting program for those executive carve-outs. We have a guaranteed issue platform, a simplified issue platform. There's some minimum criteria. The big one is the income. We need to have, eligible participants making at least $75,000 or more. And then the occupation class is probably another big one, Tana. We really are focused on that white collar managerial level. So if you kind of want to put it all together, it says highly compensated employees. They would naturally be identified as key employees. But this is not meant to be kind of a group benefit type of program. This is truly geared towards more of your executive carve out. And the great thing about Lincoln's program is it's not a single product that's paired with this underwriting. You have access to most of Lincoln's full permanent products, to be leveraged with guaranteed issue and simplified issue. And what does that mean? It just means that you as the financial professional have greater product flexibility to design a case that aligns with not only your client's risk, but also their budget. So that does give you some added flexibility when you're evaluating this underwriting option and evaluating carriers that have this type of program. More specifically, guaranteed issue obviously is kind of my favorite because we don't have to worry about the medical piece, right? If we're there targeting the ease of implementation, naturally medical questions and medical underwriting invite a longer time consideration. But that's not the focus here. To be eligible for guaranteed issue, we do have to have 10 eligible lives meeting that income and occupation criteria. Participation, not something that we see a lot of consideration, but this is not generally well suited for voluntary programs. This is something that is the employers almost mandating or otherwise providing their dollars as the plan contribution. And then capacity is based upon the number of eligible lives and what the strategy is. The best practice that I can give to anybody that kind of comes into these cases, don't start promoting guaranteed issue or simplified issue to tease out an opportunity. Do what you all already do best. Do the needs identification, go through and help the business owner identify those key employees, and then evaluate your underwriting option. If you go out and lead with the underwriting option, it's generally been a recipe for cases that never get across the finish line because we haven't vetted out the need, or we haven't really addressed, what are the budget, allocations that are going to be used for this type of program. So, follow the steps that we normally do in the life insurance sales process, prospecting, needs identification, working to identify the Lincoln product, and then, working with Tana and myself to identify the Lincoln underwriting platform that's going to be best suited for your case. And as we increase the number of lives, naturally, we're going to, take a look to see if guaranteed issue or simplified issue underwriting is going to be a fit for your case.
So Michael, did you touch on simplified? I may have missed that.
Loosely, simplified. Yeah, no, simplified issue is also part of our multi-life underwriting program. It is an option. The advantage here is that we can consider as few as 5 eligible lives, but it does have medical underwriting. The thing about simplified issue is there is never going to be a lab requirement. But some of the other elements of a fully underwritten case, such as an APS, may be requested. We're going to do a prescription check. We're going to do an MIB check. So there is, with simplified issue, I tend to caution that do some field underwriting with your case, because the caveat with simplified issue is even though we may be able to streamline the underwriting process, the end result only ends in approve or decline. There is no added consideration if somebody fall short of generally a standard rating. We don't have a way to bring them back into the plan. They get declined for that. So we really want to make sure that simplified issue is a fit, or in a lot of cases, we're trying to weigh that against, taking the case fully underwritten, where we may be able to, leverage Lincoln's Link Express lab-free program, depending on the demographics of the census.
So Michael, I'm going to switch slides, but then I'm going to mute for a second because there's someone knocking on my door. So unfortunately, that's the perils of working from home today. But I know that we do have, in terms of when we're talking about requirements, we oftentimes want to see the census for these cases, right? And then we also have a fact finder. So can you talk just a little bit about the fact finder for me?
Yeah. So this is part of the process, right? As you're going in and meeting with your business owner prospects, working through that needs identification, this kind of fact finders is a little bit of a roadmap to try to really tease out the opportunity and gather some pertinent information that the sales and underwriting teams are going to need to start to evaluate that. In addition to the fact finder, Tana, you have there on the screen a census. We're going to need a census that has names, dates of birth, their occupation, their incomes, the request for coverage, or if it's a contribution style plan, what is the premium that we're looking to put into the program? Some added detail about, what is the product design? What are we looking to do from a product design? But this is all kind of a way to help you bring these cases to an underwriting review quicker, right? Because we're not as concerned about the medical situation. We're really focused on, do we have a clearly defined plan? Do we have clearly defined plan eligibility of why these people are being included? Oh, well, they're all C-suite, or they're all the first and second layer management teams. How did we arrive at the request for coverage? What was a percentage salary, or is a multiple of salary? So those kind of qualitative and quantitative things are just as critical as we pursue multi-life business insurance cases as they are for your fully underwritten.
Well, Michael, I can't thank you enough for just having this discussion with me today. I really appreciate it. I think it's such an important topic. I think that wraps all the questions that I have for you. I think now it's a great time maybe to pivot back to EMG, open it up to Q&A. It looks like there may be a question in the chat already.
Yes, so I have Clay here, and he is asking, can you provide an overview of the best way to submit a business case application, drop tickets, IGO, paper applications, etc.?
Yeah, I think it really depends on the business owner that you're working with. I know a lot of people do prefer like the drop tickets, like the IGO platforms or e-tickets. Sometimes it's better off with that business owner to do a complete e-application, or either do a paper application. You can submit that through your EMG case managers know how to submit that over to Lincoln. And the reason I say that is if you have a business owner that's on the go a lot, maybe they don't have time to sit down and do a phone interview or to do an electronic interview. We have the option of a phone interview and an e-interview at Lincoln. And they're just kind of hard to schedule. For those particular business owners, I usually recommend doing either the paper ticket on site, and then they can scan that over to us, or do the e-ticket, which is the full application. When we talk about the more abbreviated application processes, these are for business owners who maybe have a little bit more time on their hands, can be a little bit more interactive in terms of the participation. We do have something called the Link Express application process. That is an abbreviated app. It's very few forms. And what happens is they can complete once the application's been submitted, they can complete an e-interview themselves online. They'll receive a link to do that, or a Lincoln employee can actually conduct the interview by phone. So, and that's, of course, we keep things confidential, keep things private when we're obtaining that information, but a lot of that has to do with the more detailed information you would typically see, some of the medical questions and so forth. If you do, whether it's the e-ticket, whether it's the Link Express process, if you use one of the e-processes, not the paper ticket, there is potential that up to 2.5 million, the client could possibly get lab free up to specific age groups. So that's another benefit of doing the e-ticket or the platform, because it's if you have a healthier client, again, you need to do some field underwriting there. But if you do feel it's a younger, healthier client, there's potential for them to have lab free. Then that's certainly a direction you may want to look at, is they may be willing to take the time to do that e-interview, to have that potential to possibly not have to have labs or exams conducted. I apologize, guys. Someone is banging on my door again. So I should have put the dogs outside. But hopefully that answers the question.
Yes, and it looks like that's all the questions for today. So thank you so much, Tana and Michael, for being here today. And thank you for everyone that attended. And we look forward to the next event.
Awesome. Thanks, guys.
Okay, thank you.